So what role do you think the financial sector should and can play in accelerating sustainability in the apparel sector?
So I think the financial sector has a huge role to play. HSBC has committed about $100 billion to sustainable investments by 2030 for our clients. And within that, the apparel sector is one that we're very focused in because there's a huge demand of our apparel clients to actually embed their beliefs and their values from a sustainability perspective into their supply chain and extend that into their suppliers. So what we're doing at HSBC is we've taken our normal supply chain financing solutions and we've looked at working with corporations in the apparel sector who are already tiering their suppliers based on various sustainability criteria, and how can we then embed that in the financing terms that we offer to suppliers. And that is basically taking existing financial technology and embedding sustainability standards into that.
Innovational technologies, those kinds of things. Does a bank play any role in there, or are you more in the bigger established kind of practices?
So at HSBC, we're focused on providing financing to our clients. So it depends on the clients that we have in the various segments and in the various sectors. And we'll finance all of the clients' needs, whether it's from more emerging technology that they're developing to well-established businesses that are producing cash flows. It's about the client relationship, and then we think about what is the right product to finance their needs. So, and in terms of the client relationships, we actually have quite a depth of penetration from a client base. So we are, HSBC is organized through 4 lines of business. We have our global banking and markets business, which typically caters to top FTSE 100 companies in UK terms. We have our commercial bank that actually goes all the way down into your $5 million turnover company. And then we have a business banking business within our retail bank, which actually goes to companies at the 2-3 million turnover size. So if you think about that, you're really financing very big firms that may have departments that are financing innovation projects to actually smaller startup companies, right? So we have the whole kind of segment and across all the sectors really.
Often the startups, those smaller companies, are very high risk in the very start of their lives. And especially when it comes to sustainability, it's unclear what value that provides when it comes to those solutions. Are there tools or ways to structure funding for companies of that size?
It is, I think it's a challenge for banks like HSBC. Most of our financing, what you'll see, will be cash flow based on cash flows that are coming through. And therefore, if it's more of a startup, you may need to go more into the VC space. You may actually need to rely on relationships that you have in terms of the takeout for those investments. So I'll give you an example of a structure that we actually did for an existing well-established client. When I say well-established, I mean a publicly quoted company that actually wanted to build a environmentally friendly shoe with recyclable materials, and they were trying to find a provider that could work on that technology of that type of fabric. They found that provider, but that provider was actually struggling with getting investment to open a factory so that they could produce this fabric. And so you marry the two things together, and the beauty is that the client was a client of HSBC as well. The supplier was also a client of our commercial bank. And they needed $40 million to open a factory to basically produce this new fabric. So by marrying this supply chain, and we were able to get a corporate guarantee from the big well-established client to say, we are going to guarantee the $40 million loan, HSBC, that you are going to make to this small kind of startup. And because we believe in their technology, and the repayment is going to be 3 years, 5 years, whatever it's going to be, but based on the corporate guarantee, we were comfortable and we were able to do that. So what's hard for us is it's hard for us to take a view. We don't have the expertise to take a view on whether some kind of R&D innovation project is going to work or not. We don't understand how to underwrite that credit risk. But what we do understand is supply chains. What we do understand is who are the buyers, and if there are buyers for that technology that we can credit assess, then we can make decisions.
Can you build a good business case for open source innovations?
So I think the parallel that I would look at is what we're seeing with distributed ledger technology, which really is kind of the technology behind the cryptocurrencies and blockchain. And what we're seeing with DLT is that it really is only successful if all parties are participating in the chain, whether that's banks that are financing it, whether that's corporations that are trading, buyers and sellers, whether it's shipping companies that are sending goods from one port to the other, whether it's regulators as well that are comfortable with what's being traded on the ledger. So you do have these innovative technologies that really will only be successful with multiple adoption. And I think that's the parallel that I would make. There will be certain of these technologies in the apparel space as well that will be able to benefit everyone if there's wider adoption. There are many suppliers that will be suppliers to the same clients at the end of the day, and so you can leverage that innovation.
To change an energy system in a Bangladesh or in India, which is it has much more an impact and would get us much closer to the goal. Is that something that banks like yours can structure finance solutions for? Do you work across countries to find a way to do that?
I think the financial technology that can be used exists today, right? Again, whether you're funding, you can think about asset-based lending and you're funding based on assets. You can think about cash flow monetization or receivable monetization. You think about project finance-based. This is all technology that exists. It's a matter of incentives. That's what it comes down to. It's a matter of will and incentives. Because at the end of the day, private sector banks have to cover what? Capital costs, liquidity costs, credit risk costs, operational costs. That's what it comes down to. And so it's not about inventing new financial technology. It's a matter of incentives.
I was thinking about how much money, we talked about this, that when we think about our particular sector and try to imagine how much investment, financial investment is needed to give us a chance to transform the sector towards the greenhouse gas emissions goals, the water stewardship goals, right? To do things differently. It seems to be like it could be a great deal of money. Do you think there's the money out there?
Listen, I don't know if there's the money out there. What I can tell you is there's a lot of liquidity out there looking for a home. Right? And so it depends on, it depends on the time of the cycle. There are times where you have more liquidity, you have less liquidity in the market. But from a real money manager perspective, there's a lot of investors that are interested in projects which have a sustainable angle to it. And a lot of asset management companies are actually thinking about how do we create funds that are specifically targeted towards this space. And so I think it's about working through that pool of investment that is looking for a home, and how can we direct that to the needers of the capital effectively. And that's the role that I see HSBC and a lot of other financial institutions, real money managers playing as well, is really marrying the two sides. It's those in need of capital with those that want to invest in the sustainable sector because of various reasons. It's aligned to their values and their behaviors.
If you had to only pick one thing to focus on for us to do to accelerate the positive role that the financial sector could play in helping our industry move towards its sustainability goals, what would you choose? What would be the one thing that in the next 5 years that would really make it take off?
The one thing you have to do is you have to make it contagious, and it has to be demand-led. And so, financial institutions by definition, not just HSBC, but we are here to service our clients. And we are here to find solutions for our clients' demands. And if clients demand it, we will provide it, whether it's consumers, whether it's investors. And so what you have to do is it has to become contagious. Consumers have to demand it of the corporates. Investors have to demand it of the corporates. And by definition, the corporates will demand it of their banks. And the technology is there. It's a matter of demand, and will come through.